Thank you for that introduction and the dramatic music for this discussion. It's going to be a power 20 minutes with this esteemed panel. We're going to dive right in. So I would love to hear all of your thoughts on what exactly is going to define this new era. Is it regulatory? Is it technological? Is it societal? Where is kind of the watermark here?
All of the above. I don't know if the mic is on. It's really all of the above.
I don't know. I don't know if anyone can hear Nadine. Sorry, a technical glitch. Do we have another microphone?
Yeah.
Okay. Yeah. Thank you. Check that that's on.
That works.
Okay.
All right, so I'm going to take the easy way out, and it's all of the above. It is all about the regulation, technology. We've got a massive transfer of wealth into a newer generation. So there's a lot going on, and this ship has sailed. So this is now no longer an if, but a when. We're all very fortunate to live in very exciting times.
Charles, your point of view in terms of what makes this a new era? Is it even a new era?
Well, it's definitely a new era, and I think it's probably all three. But really, it's the economy that drives this, because the financial system exists in order to power the real economy, not for any other reason. And so the economy is going faster. It's more global. It's more digital. It's more real time. And the current financial system is anything but those things. It's still operating at the speed of the post office. So how are you going to get it to operate at the speed of the internet? And in order to do that, it has to stop being an intranet. It has to be able to operate on the internet. And I think that's what blockchain enables. That's why it's really the economy that requires this upgrade to the financial system. Of course, it wouldn't be possible without technology, and you need regulation to make it safe and secure and usable on a societal-wide scale.
Dimitri?
I think it would be applications, actually, because there is zero value in tokenization on its own, basically. And historically, we've been tokenizing assets for the sake of tokenizing assets. But in reality, it's the applications that's going to be built using tokenized assets to deliver faster, better, cheaper services. So I think that will be, and of course, it does require all of the above that you mentioned, engagement with the regulator, engagement with the industry, and so on. But I think for me, it would be applications deployed.
Jay?
Just pick up on that. Faster, better, cheaper, different, more purposes, more effects, assets doing more. But I don't think regulation, maybe the words will change, but I don't think the effects of regulation or the purpose of regulation will change very much. We have too many scars from failure to have financial stability, failure to have investor protection. My bottom line on this is do regulation at least as well as we're doing it today with the new technology.
We seem to be trending towards greater adoption of digital assets, and the pace, particularly in the United States, is not perhaps as fast as it could be. But as we're here in Abu Dhabi, the ADGM, and we think about what's happening in other parts of emerging markets in Asia, it seems that it's these regions that are kind of going to lead the way when it comes to adoption of digital assets. Would that be a fair assessment of where we are at the moment?
Well, I think that is where we are, and Jay and I were talking about this earlier. There's been a very nice partnership between the regulatory status of these countries and the private sector. And Abu Dhabi is a great example of that. We are a massive beneficiary of, we're a graduate of Hub 71. We've worked with AGGM that has a phenomenal regulatory, actually I see our founder sitting in the second row there. The reason he chose Abu Dhabi at the time is because there was an amazing regulatory framework that gave us clarity to move forward. So I think the U.S., I never bet against the U.S., so I am pretty sure that we will catch up, and there's a lot of great innovation that's happening there. You've got, Paxos among some of the companies that are doing great work there. But we need a better, and Jay, maybe not new regulations, but we need a little bit of clarity and harmonization around those regulations, because we do live in a global world, and it's hard to do an issuance in one country that's not compatible in another. So we just need to make the world a little
Yeah.
bit smaller.
Yeah, look,
to get that done.
what do we know? We know that there are a lot of functions that currently take place that can be done a lot better with no regulatory risk. Okay? Like, how do we clear? How do we settle? How much time does it take? And why do we know that? Because we've seen examples of it. Stablecoin and the ability to make payments around the globe much faster than we've ever thought possible in a way that nobody complains about demonstrates that the plumbing can be upgraded. And I believe the plumbing can be upgraded without sacrificing the regulatory protections to individuals in the systems that we have.
I just wanted to add on that point. We today clear about 85 billion contracts a month. We flush the risk out of the system 24/7, 365, every 4 hours with no fails, with 8 people in middle office, right? So this is the sandbox example of how blockchain can be utilized in order to run those functions in a most transparent fashion. But to answer your question, this region is unique. For us, for example, we're an only institutional focused company, right? So we don't have any retail customers. Equally, at the same time, there isn't a huge retail population to look after here when it comes to regs, etc. And it provides for us fantastic opportunity to co-build and co-innovate together with local authorities to basically show how clients could be serviced in a better fashion. I agree with Jay 100%. No new rules should be written, right? There is a massive opportunity here, but the rules can remain absolutely the same. You can just demonstrate that adhering to those you can do in a better way. And I just wanted to also add one thing, which is, and I think generally we don't talk enough about this, is that traditional financial markets, the fuel to those are humans. Like, there are lots and lots of people that wake up every day, go to work to chase settlements. In blockchain-based financial markets, the fuel are assets. So, and again, the unique positioning of the region, whereas you can't really relocate 4.5 million people into a country, right? But you can place the assets into the contracts to basically drive the liquidity. So I think in that sense, ADGM is uniquely positioned. That's why there is more innovation, I think, especially for us and for our sector, is happening in here.
The way I would approach it is that if you look at what percentage of the world is unbanked or underbanked, why does that exist? It's because there isn't an effective way to be able to get assets, and hold assets, and move assets. And this technology does change that, because almost everyone has a smartphone now, and being able to put a wallet on a phone is relatively trivial. And so then it's about how can you do it in a way that's safe and sound. That's what the blockchain is enabling, and it's allowing you to basically overlay on a public system something that is very secure. And certainly this region is an example, but you even see it in a country like the United States, where 25% of people are unbanked or underbanked, and it's much larger in other regions. So that's what drives the adoption curve in a region like MENA, because you can now be able to pull people into the financial system that weren't there before, and be able to, they can participate, and the cost is relatively trivial. Historically, capital has been one of those things where the more you have, the lower the cost is. But almost anyone can participate on a blockchain at the exact same cost, either to borrow, to lend, to trade, as if you had 10 times or 100 times the size. That's a real powerful shift in people's ability to be part of a system.
I mean, I hear all of this, and I'm going to be somewhat provocative and say this is all great, but why can we not reach scale quickly enough? Why can't we see the liquidity that is actually going to prove what you're saying to be the case?
We have seen it in some pockets. I gave an example around stablecoin. You've seen it in your business. Why haven't you seen it on a mass scale? Because what we've done is we have built regulation on top of technology that is 30, 40 years old, 20, 30, 40 years old. To rip that out and replace it, it has cost. It has cost in two ways. It has cost for the actual tech spend and the upgrade. It also costs incumbents their advantage that they've built around that technology. So breaking through those things is why you need regulators to be smart about it. Regulators need to be technologically agnostic. Going back to the opportunity here, you can build your regulation on the new rails, as opposed to trying to change the regulation that's built on the old rails, or trying to adopt that regulation for the new rails.
I couldn't agree with Jay more. I think it's regulation is what's been holding this back. And it's unfortunate because there is a new way to do things. Doesn't mean you don't need regulation. That's how you build societal-wide trust, is you have regulation. But if you use regulation as almost an end in of itself, then you get caught in these catch-22s or unclear standards or inability to have enough certainty to make the right investments. But I think also you also have to think about network effects. The entire financial system is an intranet. It's one big private closed network. To migrate that to an open public network will happen slowly, and then you'll get to critical mass, and it'll happen very fast. I mean, Bill Gates famously wrote a book about how it was going to be the intranets that were going to run the world, not internet. And he had to change it when he was writing his book, The Information Superhighway. I think we'll look back at a certain moment in time and say, well, it was just obvious this was going to happen. It just took a little bit longer, and then suddenly it was all one fell swoop.
I think we need to remember that this area is not saddled with a lot of legacy infrastructure, so the ability of introducing new technologies and writing the regulation around that is a little bit easier, not by much, but easier. I think in the US, Jay's point is really relevant as well. I mean, if you look at the financial systems, people have made their money by exploiting the inefficiencies of the system, and now we're introducing newer technology that makes it better, faster, and cheaper, but at the same time, you know, the risk of conversion is high, and we've got to be super careful when we do that. But you're starting to see market infrastructure moving into this direction. So clearly, the acquisition of Securrency by DTCC, for example, is one example where we're starting to see market infrastructure moving. We've seen Euroclear, Deutsche Börse. So now infrastructure, the plumbing, as Jay calls it, is waking up, is moving in this direction. And I think they're going to be a big catalyst to ensure that we can, it's not going to be done tomorrow. It is going to come. We need to be patient, but and we need to continue to remind people it's not the cure to the common cold. It just takes time to take, 75 years of infrastructure and flip it over its head in 5 is not that easy.
Let me make 2 points. One is, the last 10 years, money was free, so delay was not that costly. Now delay is much more costly, or said another way, eliminating delay adds a lot more benefit. And then I just want to share perspectives with you, which I think have slowed this down. There's the entrepreneur side, which comes to a regulator and says, you know what, this is so much faster, this is so much cheaper, we should just not worry about the regulations. We should just let it flourish. Well, a regulator is never going to accept that. Regulator is never going to accept lower protection for growth or speed. On the other hand, regulators sit there and they think only about protection and not about growth. And it's a regulator's job to say, how can I achieve the same or better level of protection and get growth? Those perspectives have been missing. There's been a regulatory perspective that any efficiency must be undermining regulatory effectiveness. That's not necessarily true. And that mindset needs to change.
I mean, generally speaking, I think we weren't asking the right questions, because we see a lot of projects with no customer. So we do something for the sake of doing something, do a press release, and nothing happens after that. In reality, it's much easier to innovate and build with customers, because they'll tell you exactly what they want and what their investors want. Our customer base are mainly hedge funds and trading firms. And then subsequently, what happens if you can offer something which is literally making their lives better, then that's what really changes it. And we haven't reached the point yet, and we haven't been speaking about what are those things. Partially, actually, from what Jay's talking about, is that we as a company, we cannot not ask those questions, because we can't sit and wait for 10 years until things are going to happen. That's why 18 months ago, we have changed the strategy for copper and said we're going to control our own destiny, And the best way to predict the future is to create it. So let's find a place where we can create that future, demonstrate to the industry how we think it can work, demonstrate to the regulators how we think it adheres to the rules which are written already, and then hopefully the rest of the ecosystem in traditional space joins. And keep in mind, it's extremely hard to innovate at scale, right? Like when we're talking about 45,000 people institutions, it's very difficult, right? So I think it would be on companies like Paxos, Copper, etc., to demonstrate what are the possibilities and then bring the traditional space together. And last thing I would mention is that, and I'll swear, I'll mention this word only once, but my board member asked me, what do you think is going to happen to the crypto space in 3 years? I said, I don't think there'll be a crypto space in 3 years. I think it's just going to be called the markets, and they're going to be the same rules applied across all asset classes. And good, hopefully, from both of those worlds are going to come together. So it's about bridging those two worlds together and innovating together as well.
I mean, so asset managers will just be managing assets.
That's right.
And there won't be a difference between
That's right.
digital or otherwise.
All assets would be digital, right? There will be no difference in terms of how you treat, for example, your positions in equities or crypto. It'll be the same standards applied for professional investors, the same standards applied for compliance, reporting, risk, and controls. And hopefully we can demonstrate that some of those functions could be done with less people. And last thing, actually, the real-time information is going to be key for the next 5-10 years of evolution, because blockchain does provide real-time information. And part of the ADGM's business plan for 2024 is rolling out a CASM system, Client Asset Service Monitoring System, essentially tracking and reconciling client assets live so that everybody's aware. Now, that system in the beginning is going to be API-based, right? So there has been no blockchain. But blockchain is a phenomenal tool for that. If you can track 24/7, 365, and you can bring independent auditors to basically verify that what is correct and adds up, it's going to be a completely new evolution of financial markets.
I mean, that's quite a vision. How close are we to it?
I mean, all tools are there, to be honest with you. Like, there is no technical, like, this is another thing that people are talking, oh, blockchain is not fast. And I mean, it's...
Think about how fast we went to electronic trading. It was talked about for a long time. You know,
Yeah.
Now, human beings do not trade securities anymore. All trading is done through algorithms.
They called it a big bang. Is that what they called it when we went to electronic trading?
Well, decimalization, then electronic trading, but trading today looks totally different from 20 years ago. And that's a result of technology. And we don't think about it, but trading today takes place in milliseconds. Settlement still takes days. You know, we're going to catch up.
Yeah, I mean, it's important to note everything we're talking about exists today. I think the point Dimitri made about working with clients to find these solutions, but we can track data real time today. There's trades on the blockchain, there's settlement. The problem is it's not at scale, and it's not universally adopted yet. But the technology exists. It's not, it's not build it and they will come. It's here. It's a matter of implementation and adoption right now.
To Jay's point, actually, 100 years ago, maybe slightly more, the largest industry in the world was whaling. And over 2 years since hydrocarbons got introduced, the entire space completely eliminated, abandoned towns, abandoned everything. I think from 1935, 1936, those years, similar thing happened with cars and horses, right? So once it's there, it will be very fast. When is that point? I don't know. Hopefully 3 years, maybe 5, maybe 15.
And I actually think it could happen very fast around money movement. I think that's what stablecoins have shown, is an ability to be able to move money at scale in real time, 24/7, instantaneously to anybody. And we're not there yet where it's at societal-wide scale. But that, if you ask me what would tip it, it'll be the movement of money. And I think that might happen even in the next 12 or 18 months. We're getting really close. PayPal, for instance, has come in and has their own stablecoin, and you can start seeing networks and retail payments start to shift over. There's a huge savings that is possible, and that, I think, in some ways might be the gateway to this whole world of tokenization.
Jay, the last word to you.
I think you're exactly right, and I think putting my hat as an American on, if you're the U.S. government, you want this to happen. and you want it to happen with dollar-denominated stablecoins because it becomes part of the dollar being the international currency of trade. So if you're a U.S. motivated person, you want this technological adoption to go very fast.
Please join me in thanking our panel for a wonderful discussion. Thank you so much.